Press.
Right. Welcome, everybody, and thanks for your participation in today's event, Unlocking South Africa's Path to Prosperity, a Journey of Investment and Growth. There are a few people that will still be joining us as the presentation unfolds. We are going to be recording this as well for people that couldn't make it today, but we're going to carry on just in the interests of time. For the bulk of the presentation by Jeff. So just a quick outline of the agenda today, and a really exciting presentation from our member Absa CIB today in terms of the path to prosperity of South Africa. My name is Nigel Ritson. You might know me as the president of the Chamber of Commerce for Singapore from South Africa. And I'm looking forward to hosting this really exciting event with Jeff and Prim from both Absa Corporate and Investment Banking. What we will go through today, Prim and Jeff will have the bulk of the discussion and content. So we're going to really keep it quite short and sweet in terms of the introductions. This is the third year that Absa has had this event with the Chamber of Commerce, and leading the way in terms of content into the Singapore market and for our Singapore community and members. During the course of the presentation, if you have any questions, please put them into the chat that you'll see at the bottom of your screen or at the top, depending on how you set up, and post those questions out. At the end of the session, we'll try and get through as many questions as possible with Jeff at the head of those questions. However, if we run out of time, we will take those questions and answer them in a news blast post the event from Absa. And then we'll close today on time, hopefully on schedule. Just a little bit of an introduction to the main characters of the event today. So Prem Naidu is the Managing Director of Head of Middle East and Asia, Corridor to Absa. We have had long-standing with Prem in terms of events that have been happening over the last 2 years, and with a live event that took place in September of last year, just over the Grand Prix in Singapore, which I believe we're going to be repeating this year as well. So looking forward to having Prem up in Singapore for that event. Jeff, Head of Research at Absa, no stranger to the Chamber. I've been doing this for 3 years, to the point that we've had to change a few of the profile photos. Hey, Jeff. To be a bit more relevant. And then obviously myself, President of the Chamber of Commerce, and obviously CEO of Rubla Tech Startup in Singapore. Prem, do you want to take over in terms of the short introduction in terms of CIB, and then we'll go straight into Jeff?
Thanks, Nigel. And once again, thank you for the opportunity to collaborate with the South African Chamber in Singapore. If memory serves correctly, I think this is now the 6th event that we're having over the 3-year period. And I should also say that it's probably about time that I updated my profile picture as well. I have grown a couple of years in the last while. I think today's subject obviously is unlocking South Africa's path to prosperity, and as essentially as a Pan-African bank deeply invested in South Africa, we have to be optimistic about the country, but at the same time, not blind to the various challenges that we face as a country. But I think what is quite motivating and helps to create a sense of optimism is that we receive on a regular basis a number of inquiries in terms of trade and investment opportunities in the country. And I think the one thing that holds true for the whole continent, but certainly for South Africa, is that multinational corporates coming into the country with capital and expertise will certainly help to promote the development of the economy. I think also maybe just a few comments on Absa itself. We've got a strong history of supporting multinationals coming into Africa generally, and certainly in South Africa. We remain a leading Pan-African bank, and certainly by various performance metrics, we appear to be leading the pack in terms of growth on the continent from a financial services provider perspective. As a corporate and investment bank, we certainly a full service bank, providing everything from transactional banking, trade and treasury solutions to financing, as well as investment banking and advisory services. And essentially, we seek to solution multinationals in my corridor based out of the Middle East or Asia, looking to trade or invest in Africa generally. Singapore is rapidly emerging as a very important geography of interest. And I think given our growing levels of engagement with Singapore, it remains a very important market to support our clients. And I think, where we seek to differentiate ourselves from our peer group on the continent is both in terms of local operational experience and in-depth knowledge, together with a network of international clients. I think, one of the things that we're often asked is which are the main themes for investment opportunities in Africa generally, and I think that extends into South Africa as well. Certainly we've seen a lot of activity from an M&A perspective over the last few years. Obviously, when capital was cheaper and liquidity was quite easily available, I think a lot of that was directed towards high growth opportunities in Africa. But I think also the African Continental Free Trade Area Agreement has supported some of that investment activity, essentially building up manufacturing and fixed investment on the continent to take advantage of what is arguably one of the larger free trade area agreements globally. I think specifically in South Africa, we've seen a huge interest in terms of infrastructure development. Power is obviously a very relevant theme, but also in terms of rail and ports, as well as increasing levels of FDI generally in logistics and the transport sectors. Agriculture and consumer also remain sectors of huge interest. And I think, jumping to some of the key dynamics of Africa as a continent, with 54 countries, 1.4 billion people, and a GDP probably close or around $2 trillion, it makes sense for multinationals to try to access the growing consumer market and certainly to take advantage of the increasing levels of wealth in that growing consumer market. Just a few comments around South Africa. And I think we're in this age of growing risks around sovereign debt crises. There's threats to the US dollar as a global reserve currency. There's rising interest rates globally, perhaps combined with softening employment numbers, as well as growing geopolitical tensions generally. And I guess in that context, and if we take a step back, South Africa has challenges, but so does the rest of the world. South Africa is obviously in the top 3 of economies in Africa, depending on how you measure it. But again, South Africa still retains its position as probably the most developed and diverse economy on the continent. And in areas like manufacturing and financial services, we are definitely in terms of leading the pack. The recent presidential investment conference highlighted investment pledges of over $110 billion. That translates to the region of 2 trillion South African rand, which is an astounding level of investment, given, again, some of the apparent challenges that we face as a country. And these challenges, across electricity and certainly the constant supply of electricity, logistics, and other state-driven services. But again, I think what is quite interesting and encouraging at the same time is that the private sector is stepping in to these challenges in terms of using these challenges as opportunities and effectively crowding into these spaces in terms of things like various independent power projects, commercial and industrial scale self-generation, and with further Department of Mineral Resources and Energy deregulation on the energy side, utility scale power projects are certainly now possible in South Africa. In addition, I think in the transport sector, particularly some of the challenges around Transnet, I think what is encouraging is that the rail infrastructure is now being opened up to independent providers of rail solutions. And I think that is where generally the state-owned entities in South Africa and the private sector can combine to effectively solve for some of the many challenges that are quite evident. ABSA has, over the last 6 years or so, produced what we call the ABSA Africa Financial Markets Index. And in the 2022 publication, we evaluated the financial development of 26 countries across 6 key pillars. And the aim is essentially to show how economies can reduce the barriers to investment and boost sustainable growth. And I'm sure Jeff will touch on this in more detail. But I think the point I'd like to make here is that South Africa is rated #1 in the peer group overall, and certainly displayed top performances, if not #1, in terms of market depth, access to foreign exchange, market transparency and the regulatory environment, the capacity of local investors, the legal standards and enforceability. But sadly, we were ranked #6 in terms of macroeconomic environment and transparency. And I think that will essentially form the backdrop of Jeff's discussion now. Just a brief introduction for Jeff. He's the ABSA Group Chief Economist, as well as the head of fixed income and currency research. And under his leadership, the team has been rated #1 on the multi-year basis. So with that, thank you, and we'll hand over to Jeff.
Prem, thank you for that, Nigel, and your team as well, and for everyone joining us this afternoon. Thank you very much. As introduced, I'm lucky enough, I'm the Chief Economist for ABSA. I've got an opportunity today to speak around 2 broad things on South Africa. I think one is maybe a little bit of a catch-up as to where we are. And for those of you who follow South Africa, even in a peripheral fashion, you'll know that part of the talk, frankly, is maybe a little bit downbeat. But then I also want to transition from that into sort of the investment environment and opportunities. Now, I sit on the public side of the business. I'm a chief economist, so that's about as non-entrepreneurial a role as you can get. But I'm fortunate enough, I've just spent the last 3 days in a business forum hosted Pan-African, but hosted here in South Africa around the African Continental Free Trade Agreement. And there's quite a lot of work being done on that side. And I think that South Africa in particular, though not alone, a number of countries, but South Africa in particular, stands to gain a lot from that space. And as mentioned from Prem, we're also barely a week finished from the 5th of these annual South African investment conferences, and really heartening to see sort of another big dollop of investments projects, pledges being made, and an update on the stuff that we've had left. So what I want to do is go beyond kind of where we are right now and where the challenges are, and to remind sort of ourselves as to why South Africa continues to be successful in sort of pulling in interest, not only from firms that are here, whether they be local or global firms already in South Africa, but new firms coming in. But let me start perhaps with the first of that 2 broad topics, and that's the one, frankly, that's a little bit more downbeat. We're currently in what in the South African language is stage 6 load shedding. What that means in a practical way, I live only about 1.5 kilometers from the financial center of and legal center of the African continent. And right now, I'm seeing between, say, 9.5 and sort of 11 plus hours of load shedding a day. What does load shedding mean? It means that I'm on battery. So certainly electricity is very, very top of mind. On the left-hand side here, we're taking a look at the plans from the new electricity minister, the plans from Eskom and others, and it's couched in this language of energy availability factor. 100% would mean that all of your installed generating capacity is ready and able to work. 100% isn't really the goal that firms look at, because you always want to have some of it on sort of planned maintenance, making sure that it's going to run not for the next few days or weeks, but that it's going to run for the full life of the plant and equipment. Well, you'll see in that graphic that the plans for fiscal, this is Eskom's fiscal year 22-23, was down well below 60%. Currently in South Africa, we're sitting with an energy availability factor of about half, which means roughly half of the installed capacity of Eskom is either down for planned maintenance, or a much larger part of that is down for unplanned reasons. And so that's placed the country in a very, very difficult position. The forward-looking guidance from Eskom and government is that they're working very hard to try to get that energy availability higher. Whether that will be delivered or not, and at what pace and at what degree of success, very hard to say. For what it's worth, on the economic side, we sort of assume that only half of sort of this recovery in generation over the next year or two will be able to be delivered. But I want to be very clear that we are not electricity experts. That's an assumption, kind of, rather than a forecast, but it helps kind of motivate how we think about the near-term economic opportunity. And the reason why that matters is a little bit clearer from the graphic here on the right. The graphic here on the right is translating energy availability in a very practical way. In the red bars, right, how many hours per year is there load shedding in the country? But maybe more critically, it's not just the red bars, the number of hours, it's the orange bars, the actual amount of electricity being shed. So remember, I spoke a moment ago about stage 6, and that means that there's quite a few parts of the day in which I don't have electricity. And so it's not just the number of hours, but how many businesses or households are facing the electricity crunch during those hours. And there you can see that there's a very, very dramatic increase. I'm not sure whether your display screen looks similar to mine. Unfortunately, the rightmost bars are the ones that in some ways are most important, and I can't see them, but hopefully I made the slide, so I know what it says there. But what you see in this space is that even last year, compared to 2015, our previous worst year for load shedding, last year, in terms of the number of hours of load shedding, you had about twice as many hours as the previous worst year. But in the orange bars, you can see the intensity, the amount of electricity that had been shed from demand was vastly larger. And this year, we're seeing an even more accelerated version of that. And why that matters is less so, it's less about a household. Certainly, it's frustrating not having electricity, but not having electricity for 2 hours a day or 4 hours a day. One is kind of twice as bad as the other. It's not much more serious than that. Same thing is probably true for retailers, right? Having to go and back up energy for 4 hours versus 2, it's kind of twice as bad. It's not much worse than that. But if you think about one of the strengths of South Africa, that we have a heavily diversified economy, certainly in the context of Africa, you have significant amounts of manufacturing, for example. Well, in that space, there are many manufacturing processes, well short of big things like steel smelters. There are many manufacturing processes that this stop-start can be really very, very damaging. And at the levels of load shedding we're at now in South Africa, there are days in the week where for many small and medium-sized manufacturers, it's simply not possible to start the processes. Because if you're only going to have electricity for 2 days or 3 days, you can't run for a full product run. So electricity is a really serious problem right now. You see that not just currently, where we're at an absolute acute part of the challenge, but you see that over longer periods of time in South Africa as well. The table on the right is looking at a number of kind of arbitrary dates, but the first of those columns, 2022 versus 2007. 2007 was the last year that South Africa enjoyed before we started load shedding. So we've had 15 years where electricity has been a very significant constraint on the economy. So that's the first column, and that says that overall, over these 15, 16 years, the economy has grown by about a fifth. 21% in real terms. So already you'll notice that that number is not big enough at all. But within that space, those sectors that are most electricity intensive, something like the mining sector, coal mining company, not very electricity intensive, gold or platinum, underground mining, heavily electricity intensive. So over those 15 years, the mining sector in South Africa has shrunk rather than grown. Over the last 15 years, the manufacturing sector as a whole has shrunk, right? The construction industry is smaller today than it was 15 years ago. And all of these things are very electricity intensive. The middle column is perhaps even more striking. In some ways, the date here is a little bit arbitrary. The middle of the last decade, there's nothing particularly magic, frankly, about 2015. But if you take a look in that space, the construction sector is smaller by almost a third, right? Manufacturing sector is smaller by 6%. Mining is shed about a tenth of the value add. The overall economy since 2015 is barely 4.5% larger than it was before. To put that into sort of an African context, that's about 7 or 8 months of a single year of economic growth in Kenya that South Africa has managed to generate over sort of 7 or 8 years. So there's a real challenge in this space. We've talked through that challenge before by what that means in terms of jobs, in particular, for a country right now where the official unemployment rate is deep into the 30%, right? The challenge that you have in that space, of course, a country that is growing more slowly generates fiscal challenges and others. But this first part of the talk has been very much focused on one critical part of infrastructure, and that's electricity. I suppose I should also spend a moment here in just thinking about some of the transport and logistics challenges that have really started to emerge into the forefront as well. And at the core of that is sort of very much the challenges of another of our very large state-owned companies, which is Transnet. Transnet's finances are in nothing like the strange shape that Eskom, the electricity company's finances are. But operationally, we're starting to see sort of the same sharp deterioration that we started to face from Eskom a decade and a half ago. Graphic on the left here is looking at rail freight, and the red line there is thinking about millions of tons of rail freight, and you see it falling by about 20% over the last couple of years. This matters a lot, right? It matters if we're moving containers around, because that's about efficiencies, and that's about ensuring that South African manufacturers can get product to market at a reasonable cost and at a way that's globally competitive. But it matters perhaps even more for a bunch of the bulk mining that we do. So in that space, you're thinking about coal, you're thinking about iron ore, you're thinking about chrome, manganese, and others. We're sort of at an absolute limit in that space. There's only so much bulk commodities that you can put on the road. Certainly, there's been a dramatic increase in the number of trucks carrying coal to the Durban port, for instance. We now have 500-600 trucks per day arriving there. Of course, the port was never designed for that. So the knock-on impact of all these trucks arriving is increased port congestion, increased logistics costs. But more broadly, an environment where sort of bulk transport is really starting to deteriorate is one in which sort of the broader opportunity for an important part of South Africa starts to be perhaps a little less rosy. The Minerals Council, sort of the industry body for the mining and resource sector in South Africa, is highlighting that they believe that the transport restrictions that they're facing in South Africa right now means that in some parts of mining, they're leaving sort of $3 or $4 billion each year of material in the ground. Now, that's $3 or $4 billion that would contribute to South Africa's export proceeds, provide support for the rand. There's the taxes that come from that provide support for the fiscus and the opportunity for government to then spend on social and sort of soft infrastructure programs. But also, quite frankly, it's about jobs as well. $3 billion in lost export proceeds each year is tens of thousands of jobs in a country that can really ill afford to leave those jobs to one side. So our focus often is on electricity, but we have transport and other challenges as well right now. Now, typically what we would be looking for at this point is some sort of broad investment. And I'm going to feel a little bit schizophrenic this part of the talk, because here in the first half, motivating where we are right now, I'm going to talk to an environment where we're really suffering as a country for an investment, and we really have a need to kickstart it. The schizophrenic part of this part of the talk will be a little bit later. I'm going to give a much more upbeat message on this side about what we're actually seeing. I believe I included these slides when we spoke about a year ago around South Africa. The left-hand side here is looking at business confidence, right? And sort of above 50, businesses believe tomorrow, to paraphrase, business tomorrow is going to be better than business was yesterday. A business that is confident, of course, is a business that's probably not only printing some money, but frankly, South African businesses have remained sort of astonishingly profitable throughout sort of the economic cycle. But a business that is confident, more critically, is a business that's also probably in a position to think about investing, right? With a time horizon of 5 or 10, or in the mining sector, 20 or 30 years for when these investments, come good. And so what we look at, and here we're taking a look at 30, 35 years over South Africa, is in the first part of the sample, you see the typical business cycles, right? Economy's turning down, confidence is very, very weak, and then confidence turns more positive, and then typical business cycle stuff. But what's very striking in this space is if you take a look over the last 10 plus years, is there's still some cycles in the data, but they don't go from net negative to net positive. They're varying degrees of net negative. And that's associated in an environment, as sort of I'd mentioned, where businesses are, on the whole, less likely to invest. And that's the line on this left-hand side graph. That's looking at business investment, gross fixed capital formation as a proportion of GDP. Hit a peak in 2009-10 of about 15 or 16% of GDP. Still well shy, frankly, even in our best years, of what you might accept as a normal year in Southeast Asia, but plummeting to multi-decade lows currently. And that matters, right? Because businesses that don't invest today can't express surprise that their businesses aren't any bigger tomorrow. And you net that all up across all business. And so if you're investing very little as the private sector more broadly, it's difficult to express surprise that tomorrow your business isn't a whole lot larger. What's tricky in South Africa right now is it isn't just private sector investment that is really quite modest, but in the graphic on the right, we're taking a look at public sector investment, whether it be government in sort of the brown line, or whether it be the state-owned companies in sort of that gold-colored line. But for different reasons, we've also seen investment on that side really slip and fall. Now, there's sort of this argument that you don't ever want to waste a good crisis. And I suppose one of South Africa, I've lived in South Africa now for a little more than 16 years. And I think that for much of that period, I would argue that one of the strengths of South Africa is that despite all the challenges, the country never really slipped into proper crisis, right? Business finds a way to get around the various challenges despite very high levels of unemployment. The government's able to generate enough social payments in order to protect people from the worst forms of abject poverty. We live constantly in South Africa to sort of fight another day. The flip of that, though, is that in the absence of crisis, it's very difficult to see brave decisions being made. Singapore is often used as a sort of a shining example of a country that was able to affect long-term plans, make difficult decisions over a time horizon that allowed you to see the fruits of those decisions, not just the near-term costs. But for every Singapore that exists, there are far, far, far more countries, particularly in emerging markets, that really struggle to make those difficult decisions unless absolutely forced to. And I think what we're seeing evidence of right now is, whether it be the electricity crisis, whether it be sort of the increasing failings in transport, whether it be the lack of jobs, whether it be sort of the increasing stress on the public sector's balance sheet, is we're now getting close enough to a crisis that brave decisions are being made. And so this is the part of the talk today where I move from being quite downbeat and frankly a little bit negative, and then start to talk in the other direction and sort of express a view why I'm feeling more positive about South Africa tomorrow and the day after now than I have really for a great number of years. So as I mentioned, sometimes you get close enough to crisis that you can break that logjam, and difficult political decisions are made and pushed forward. And certainly I'd like to make the case that we are starting to see that in South Africa. It's not on everything, right? So the third column or list on this page is things that need more intervention. We're starting to do, there's a tender out right now for a cadastral system that just makes it easier to understand who owns which mineral rights where, what exists in the ground and others. It seems like an obvious thing for a country that has had a really sizable resource sector for well over a century, but we haven't had it, and we're starting to make progress there. We want to improve the efficiency of ports. We've got some tenders out right now, but it's still very early in that process. I spoke already about energy, the integrated resource plan, and others. So there's a lot of stuff there that's either very early in getting intervened, or we haven't even started it. The middle column is around things that perhaps were not near completion, but at least progress is being made, right? So there's important progress being made on work visas, business visas, e-visas, right? Again, nothing like the smooth system that exists in Singapore, but significantly better than where we were before, making it easier, right, for South Africa and international businesses to engage with South Africa. Prem mentioned in his opening comments around sort of third-party access, private participation in the rail network. We seem to be certainly at least 2 steps forward right now for every step back, and that wasn't the case even 6 months ago. And while it's continuing in a bit of a slow fashion, sort of this restructuring, right, the splitting of Eskom into distribution and generation, and sort of moving things around, we are making more progress on that side before. But I'm really chuffed, really pleased that there's a box on the left-hand side of this page where the reforms, important reforms that are being completed, right? So again, Prem mentioned a little bit earlier, sort of this huge increase in the number and size of projects that are in progress right now, that have been approved and in progress around really utility scale power generation. And that's quite beyond sort of the bid windows for renewables, where we've finished 5 and 6, but the next bid windows, it's a huge loosening of the regulations in that space. 12 months ago in South Africa, despite at that point being 14 years into load shedding, for our own generation, you were really stuck to under 1 megawatt of production. That moved to 10, and then a couple of months ago moved to 100 megawatts. You really are at that point getting to utility scale projects, and the number of applications and the size of the projects have really accelerated in size. We've managed to complete the spectrum auction. So we'll finally be freeing up that part of the spectrum that will really allow for more significant rollout of things like 5G and others. We're being smarter around water use license applications, and that's absolutely critical for part of the mining sector, but also parts of heavy manufacturing. So there's an awful lot happening right now. And almost all of this stuff wouldn't have existed on the slide 6 or 12 months ago. And so we are seeing in a practical way sort of the crisis or near crisis for growth and jobs in South Africa turn into tangible action, providing more space for the private sector to lead in South Africa than we could have hoped for not that long ago. And that really is fantastic news. We've touched upon a little bit earlier, sort of the South African Investment Conference. So this has happened. There was a small interruption during COVID, but we've had our 5th conference here in Sandton, just sort of 2 kilometers that way in the last week or week and a little bit. The headlines from this is that over the 5 years of this conference, there's plus minus 1.5 trillion rand. So the exchange rate has moved for this over this period. As I say, that's sort of $110 billion in investment pledges. And that was before sort of a little bit earlier this month. We've got about just shy of 3/4 of those projects that have either come to fruition or in more cases that are at least underway. So it's not just a pledge and then we'll see where it happens. You know, the holes being dug, the stuff is being built, the investments are starting to happen. And perhaps even more excitingly, even in the face of the very difficult environment currently in South Africa, and not, frankly, a very easy environment globally either, we saw around 400 billion rands in new investment pledges made at this year's investment conference. And I've sort of highlighted a number of those in the boxes below, but on the energy side, for example, Hive Hydrogen doing green hydrogen and green ammonia in the Eastern Cape really could be groundbreaking for part of South Africa. In the ICD and digital space, right? Very significant investment pledges around rolling out sort of the latest rounds of 5G and others, but just as critically, it's around cloud-based computing, it's around these data centers and other sorts of infrastructure, taking advantage of South Africa's position vis-a-vis a number of undersea cables and others in that space. In the resource sector, right? In the resource sector, more than 50 billion rand in new investments going into sort of platinum, going into metals, some going into coal as well. In terms of manufacturing, some huge investments being announced by Heineken in South African breweries, Rainbow Chicken as well. And then the more traditional, when we think about manufacturing, companies like BMW and others, really putting sort of pen to paper and saying, despite the challenges that we have in South Africa, we recognize, right, the business opportunity that exists here. So when the investment forum or investment conference was first announced, you know, the idea was that this would be a set over 5 years, and the target was to generate at that point and at that exchange rate 1.2 trillion rands in investment. And when that was announced, that equated to about $100 billion. They say the exchange rate has moved since then, but over those 5 years, about 1.5 trillion rands of pledges have been received. And President Ramaphosa, speaking about a week ago, suggested that our next 5 years, right? So the investment conference, the annual investment conference will continue. That over the next 5 years, the target has now been pushed to an additional 2 trillion rand. And so that leads me really to the last part of my talk, which is asking the question, you know, with all the challenges that we highlight here, how is it or how should investors think about South Africa as a business opportunity? Invest SA, Invest South Africa do a superb job of this. I believe, Nigel, that there's going to be an event over the next week or two, an in-person event looking at some of the food and wine producers in South Africa coming for a visit there as well. But let me touch upon, from where I sit as a macroeconomist, where I think some of South Africa's biggest positives are, right? So certainly within the African context, South Africa is, if not the most sophisticated economy, certainly can make a credible claim to be that, and absolutely one of the largest. Prem mentioned in his opening comments that we're roughly a $400 billion economy. We're kind of plus minus, whether it be Egypt in North Africa, whether it be Nigeria in West Africa or South Africa, we're all plus minus there at this sort of $400 billion plus. I think it's less contested that South Africa, certainly of all those countries, we have sort of the largest affluent class of consumers. And although Egypt is impressively diversified as well, we'll probably also, can lay claim to being the most diversified economy in South Africa, even as we often tend to think of ourselves as still very resource-based. We have a particular strength in things like legal services and financial services. It feels a little bit rich speaking to you as one of the large Pan-African banks headquartered in South Africa, but banks and banking are really a critical strength here for businesses that are setting themselves up. Private sector credit in South Africa is about 70% of GDP. So it's not only that very large businesses are able to access this, it's small and medium enterprises. Households, right, have very substantial amounts of access to credit, whether it be traditional things like credit cards or unsecured loans or 30-year mortgages or vehicle finance. We have very large domestic asset management base. And so it's certainly the case that the vast majority of investment that sits here in South Africa, the money supporting that are domestic monies as well. There's a clear commitment from the regulators to strong global standards, particularly around financial services. So, that's IFRS 9, that's Basel III and others. And then, of course, and it speaks again for larger businesses that look for sources of local financing, is not just phoning up banks like ABSA and asking for it. South Africa not only has by far the largest domestic bond market on the continent, by far the largest equity market on the continent. In fact, they are amongst the very largest markets across EMs globally. It feels a little bit strange sometimes to talk in a positive light about infrastructure and logistics. I just spent several slides saying that we got a real problem in electricity, and transport is sort of the next domino here that looks like it's about to teeter. But at least in an African context, right, if we just take a step back, we still have vastly more installed capacity. We have vastly more access to formal sector electricity generation in South Africa than anywhere else on the continent. We have a vastly larger road network. We have a vastly larger rail network. In Durban, we have the largest port on the continent. So that's not escaping the fact that we need to do much better with those. And the expectation is with private sector participation, we're going to start to do better. But if we just think about it in an African context, South Africa still can kind of hold itself high in that space. And then around telecoms, right? So even in the rural areas, you have now 97, almost 98% coverage. 4G coverage across the broader population, sort of 98%. And with the spectrum auction behind us, we'll start to roll out 5G as well. Of course, everyone's aware of our natural resources. Historically thought ourselves are just about gold, but whether it be platinum group metals, which are absolutely critical in terms of the global energy transition, whether it be chrome, manganese, or a whole host of others. There's an awful lot of stuff here to get out of the ground and to send to global markets. There's also an important point to make, and this is my last content slide. There's an important point to make here around competitiveness and innovation. So the Global Competitiveness Report, the World Economic Forum guys, that report is on hiatus currently. So I must put my hand up and say, the second in Africa statistic I've used here is from 2019. And I don't doubt that South Africa would see some deterioration from where we were a couple of years ago to where we are now. I don't doubt that. But the broader point that South Africa not only positions itself well in the continent, the last few years, second only to Mauritius in terms of global competitiveness, but ahead of other major emerging markets that pull in a lot of investment. The Global Innovation Index, South Africa also places second in. Again, interestingly, just behind Mauritius, but significantly ahead of our large sort of regional and continental peers. And part of what's helping all this is that for all of the frustration we have in South Africa about the public school system and whether or not it is able to provide basic education for all of South Africans' young people, we can be rightly proud that on the university side, whether it be University of Cape Town or the University of the Witwatersrand, whether it be the University of Joburg or Stellenbosch, we have 4 of the top 5 rated universities on the continent, including numbers 1 and number 2. It's a little bit close to my heart thinking about monetary and fiscal policy, but I don't think it should be underrated. So Prem mentioned a little bit earlier, as ABSA, we do the ABSA Financial Markets Index every year. Within that, we're trying to get African countries to think about sort of open and transparent and accessible markets as the best way to put sort of global capital to use and to put domestic capital to use to build sort of more vibrant economies. Well, in that space, right, South Africa does a particularly good job. Right, National Treasury communicates regularly and well with the market and other stakeholders. There's a twice-a-year budgeting process, including a medium-term outlook, but maybe just as critically, particularly when globally right now, we're very focused on a sort of debt and debt sustainability. South Africa has the second highest debt maturity profile for government in the world. And so why that matters is it provides you with quite a strong bulwark when global rates are rising. You don't suddenly reset all of your own rates domestically and move in an accelerated fashion to some challenge on debt. On the central banking and the Reserve Bank, it's not only clear communication around monetary policy and really good regulation of the banks and others, but particularly as a standout for Africa, the Rand is highly liquid. You can always get the amount of Rand that you need or sell the amount of Rand necessary to get the hard currency that your business requires. So it's highly liquid, right? And it's highly transparent, right? The number on the screen is the number that you can transact at. And that is increasingly rare across the continent and really vital if you're thinking about managing your investments here in South Africa. We have a very strong constitution and the independent judiciary, and that's been very important during this period where we haven't necessarily held our chins high as we hear more and more about the depths of corruption that has found its way into South Africa over the last decade or two. But make no mistake about it, the courts have stood strong, the judiciary has stood strong, and that is the foundation absolutely necessary for South Africa to crawl its way back out of some of this fraud and corruption hole that it's found itself in. And the very last point I want to make, and I'd mentioned at the beginning of my talk that I just spent 3 days at a business forum with obviously business and experts, but ministers as well, around the African Continental Free Trade Agreement. Premjin touched upon it at the beginning. In terms of the number of people involved, this would be the world's largest free trade agreement. Within that space, significant progress is being made at a pace, I must say, has surprised me. But within that, and through the narrow lens of thinking about exports and exports of things like manufactured, well, South Africa stands in a very strong position for that. First of all, having the most diversified manufacturing base on the continent to start with, but already having the trading relationships, already having the transport links to really be able to take advantage to lift not only South Africa, but neighboring countries through sort of global through regional value chains and others, being able to really deepen sort of some of the economic success that is there. And then you'll see the very final point here. Despite all of South Africa's challenges, we already have, it's not quite 200 of the global Fortune 500 companies that are already present in South Africa, but it's more than 180. So there's business to be done here. There are opportunities to be had. And I think, at least from South Africa's side, we're starting to turn the corner, making braver decisions on the side of government and policy, and hopefully opening up some more economic growth for the periods ahead. Let me leave my comments there and hand back over to you, Nigel. Thank you.
Thanks, Jeff. Really balanced, a balanced presentation, and it's really good to see some of the positives that are coming out of South Africa, even with its challenges that it does have. We have a few small questions. Don't know if it will be able to be answered within 5 minutes, but just coming from the team, and maybe you touched on this in the last 2 slides, but the outlook for the rand, given the stickiness around the 18 rand to the dollar mark. What is your view on the rand's sort of look forward?
So we do an awful lot of work around the rand itself, as you might expect. We tend to base on a couple different sort of valuation tools. One, we look at other high-yielding currencies and where we fit in with that. One looks at other commodity exporters. One looks at sort of risk pricing versus the US dollar. And then our fourth model is sort of that Big Mac index kind of stuff, thinking about purchasing power parity. Of course, if you look at it in 4 different ways, you get 4 different answers. That's almost leads itself to an economist joke. But they all kind of tell us that we're plus minus where we should be. So our formal forecast for the year, I think maybe second quarter, end of June, it's got a 17 handle, but it's a big one. It's something like 1790. The end of the year, we're kind of in this almost the same place we are now. It's sort of mid 18s. There are a couple big drivers, right, that we just want to watch. So one of them, of course, is just how you think about the global dollar, particularly given the huge pricing difference between what financial markets believe the Federal Reserve will do and what the Federal Reserve Board of Governors is signaling through the dots plot. There's more than 100 basis points in difference, and that will be critical for the direction of the dollar, not just against the rand, but against everybody. And then maybe a little closer to home, the Financial Action Task Force. Apologies, the Financial Action Task Force greylisted South Africa in February. And while we had expected that to happen, it's certainly not great news for the rand. We don't think that it will be a significant driver, but we note that looking at sort of a dozen countries that have been greylisted over recent years, on average, currencies weaken about 4 or 5% after greylisting. I don't know if we'll see that in South Africa, but it's certainly something we're watching. But right now, our forecast, as I say, kind of the same range that we've been in, sort of mid 18s is kind of where our forecast is.
Great. Jeff, just one more, and you touched on it right at the end, so this question might be a little bit already pre-answered, but the African Free Trade Agreement, it's something that I think for the last few sessions we've been talking about. But in terms of South Africa's foothold on executing opportunities to that agreement, what do you think are the big factors determining us being competitive, or South Africa being competitive against the likes of the other continental players?
Well, it's harder until the electricity situation has stabilized, but more broadly, right? If we think through a narrow lens, if you think through manufacturing and manufacturing value add, South Africa, perhaps with Egypt, are by far the most industrialized countries on the continent. And so as new markets open up on the continent, I think you stand a very good chance of being able to take advantage. I was involved in a session around the auto sector on Monday of this week. And there was some really good engagements, particularly from a ministerial level from West Africa. And the point that was being made there is that not every country is going to be able to produce cars, right? You're thinking about regional value chains. And so what you want to be able to do is, as a country, you might want to be doing wiring harnesses. Botswana, for example, does that now. You might want to be doing dashboards. You might want to be doing tires. Well, the way you're going to be able to participate in that, right, is that as a continent, we're going to need to be more aggressive about controlling the import of used vehicles from the rest of the world, because that's where most vehicles come from elsewhere on the continent. You will do that and see that you will gain advantage in your own economy, because the total African market for African produced vehicles will get larger. You don't necessarily need to make that vehicle yourself, but you'll be in a position to participate in the value chain. And so in the absence of those external barriers, that the broader market won't increase, but it requires thinking about this on a regional basis, not each country individually. And I was really struck by the quality of that discussion, really quite excited about it, to be honest. And I think if that discussion is reflective of the discussions that are happening more broadly about ways in which African countries can work together to secure more of the value chain, to secure a much bigger opportunity, but split in different ways, I think the African Continental Free Trade Agreement can be a huge success. And again, the starting point for a country like South Africa, already being very industrialized, already having so many global companies here, already demonstrating global competitiveness in things like fast-moving consumer goods and things like autos and things like food processing. I think it stands South Africa in very good stead.
Yeah, definitely. Jeff, just spending some time in Cape Town recently, actually coming to you from Cape Town today. The amount of activity or business activity here, met with another partner here, Westgrow, which handle a lot of the export side of South African resources. But just the activity here is definitely, you can feel that there's an attitude to do business, which is great to see. Thanks for that. We're going to wrap up now, and Jeff, thank you very much for your insights. It's actually so good to have a summary like this, because we definitely know about the challenges, but to actually see the balancing approach to some of the benefits is really good. We will be launching the summary of this event out to the community after the event, as well as sharing the video on sign up. So do stick around for that. Prem, thank you so much for your participation as well, and I'm sure you're looking forward to getting up to Singapore and seeing some of the stakeholders that you met there last year. And yeah, thank you very much. Prem, did you want to just say anything?
No, thanks. Yeah, just thanks, Nigel, and thanks to the participants today. I think certainly an informative presentation from Jeff. So Jeff, thank you for your time as well, much appreciated. And as you say, Nigel, looking forward to being back in Singapore soon.
Fantastic. Thanks, Prem. Thanks, Jeff. Enjoy the rest of your days.
Thank you. Cheers. Bye-bye.
Thanks, everybody. Goodbye.